Before you scroll any further, if you're thinking about buying a home in Central Florida, save this video right now. Because most first-time home buyers and people relocating to the area lose money at closing, they don't lose it after they move in. Buying a home is definitely exciting and a huge milestone, but here's what no one really explains up front. The purchase price and the mortgage payment are only part of the story. Many buyers focus on what the lender pre-approves them for or the monthly payment they see online. And then after closing, the real costs start showing up. These are the costs that don't show up in online calculators. These are the things first-time home buyers often miss, and these are the conversations I have with buyers every single week. So let's get into it. Property taxes. This is one of the biggest surprises for first-time home buyers and people relocating to Florida. When you look at a home online, the tax amount you see is based on what the current owner pays, not what you're going to end up paying. In Florida, when a home is sold, the property taxes are reassessed. That means the tax bill is recalculated based on the new purchase price. In Central Florida, in places like Polk County, Lake County, Sumter County, Lakeland, Winter Haven, Orlando, and all those surrounding cities and towns, this often results in higher taxes. If the seller has owned the home for many years, their taxes may be much lower than yours will be. So that monthly payment your lender estimates early on can increase after the first year. This usually happens when the escrow account is adjusted. That's why I always recommend asking for a tax estimate based on your purchase price. Homeowners insurance. This is a huge one in Florida. Even though Central Florida is inland, insurance costs have risen significantly in recent years. Many buyers are shocked by how expensive insurance can be down here. One of the biggest factors for insurance specifically is going to be the roof age. If your roof is over 15 years old, insurance premiums may be higher, and some insurance companies will require inspections, roof certifications, or even roof replacement. Wind coverage is another factor. Florida homes need coverage for wind and storm damage. And then there's, of course, flood insurance. Even if flood insurance is not required, it's something buyers should at least review. Flood maps constantly change along with weather patterns, and flood insurance can be much more affordable when it's an option versus being mandatory. For example, flood zone A versus flood zone X. My advice is simple. Get insurance quotes before you make an offer, and especially on older homes, this avoids surprises after you're already under contract. Now the good old HOA and CDD fees. These are very common in Florida. HOA, as you may know, stands for Homeowners Association, and this usually covers things like lawn maintenance, community amenities, exterior maintenance in townhomes and condos. HOA fees can range from $20, $30 a month, and I've seen as high as $900 a month. CDD fees are a little bit different. That stands for Community Development District. These are most common in newer developments, and this is going to help pay for things like the roads, the infrastructure, utilities, and community amenities. Unlike HOA fees, which are paid monthly or quarterly, CDD fees are often included in your property tax bill. Here's what buyers often miss. These fees will not go away. They can increase over time, and you still pay them even as the amenities age. That's why it's important to understand your total monthly cost, not just focusing on that mortgage payment on the online calculator. And of course, we have closing costs. This is an area buyers definitely underestimate. Most buyers focus on saving for the down payment, which is great and a vital part of this, but closing costs are a separate expense altogether. In Florida, buyers typically pay about 2 to 4% of the purchase price in closing costs. These costs can include things like the appraisal, title insurance, lender fees, prepaid taxes, homeowners insurance. Florida is a title insurance state, so this is a common expense here. The good news, though, in some situations, we're able to negotiate seller concessions which can help offset some of these costs. But it is important to plan for them up front so you're not scrambling right before the closing. Now, ongoing maintenance costs. Florida homes have unique wear and tear to them as opposed to other parts of the country. Air conditioning systems run most of the year. Roofs are exposed to intense sun, heavy rain, and storms. Termites, moisture are extremely real concerns. Therefore, I usually recommend budgeting about 1 to 2% of the home's value per year to go toward these maintenance areas. A quick example would be a $300,000 home. That's $3,000 to $6,000 per year to cover these maintenance costs. Older homes may cost less upfront, but they often require more ongoing maintenance. Understanding this helps you decide what type of home fits your lifestyle and budget best. Of course, we have utilities. Electric bills in Central Florida are often higher than expected. Air conditioning alone can make a big difference. If a home has a pool and there's a pool pump constantly running, if there's irrigation, if there's additional water usage, because of the amount of people living in the house, water, sewer, and electric costs can add up very quickly. One simple tip: ask the seller for average utility bills. Go back 3, 6, even 12 months, see if they can give you that. That'll give you a realistic idea of what to expect each month. Now we have inspections and move-in costs. Beyond the standard home inspection, Florida buyers often need additional inspections. This can include 4-point inspections, wind mitigation inspections, roof certifications. These will all help with the insurance and potentially give you some discounts, as well as long-term planning. But they do add up front costs. Then there are move-in expenses, blinds or window treatments on new houses, appliances that may not be included. Obviously, furniture, lawn maintenance equipment, security systems. These are costs often hit right after closing, and many first-time home buyers don't fully budget for them. Costs after year 1 is something most buyers don't hear about. Your payment after year 1 may increase, not because your loan changed, but because property taxes and insurance were adjusted. This is a very common thing in Florida. It doesn't mean you made a bad decision. It just means you need to plan ahead. Building a buffer into your budget can make this adjustment much less stressful. Buying your first home in Central Florida can be an incredible experience, but understanding the full cost of ownership is key. The smoothest transactions happen when buyers plan ahead, ask questions early, and work with local professionals who know this market and know how to guide them. If you're thinking about buying and want a clear breakdown based on your price range and location, I'm always happy to help. Make sure you like this video, subscribe for more Central Florida real estate tips, and I'll see you on the next one.